Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon as we welcome you into another edition of Market Talk here on this Thursday. Great to have you with us. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. You can find all our streaming sources there and much more. Again, markettalkag.com is our home on the web. Well, we got plenty to discuss here on this Thursday. A fairly decent day in the markets. We saw a little pressured soybeans, though, and the soy complex. Let's discuss all of it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us today. Bryan, good afternoon to you, sir. And Thursday, we're nearing the end of the month, and I mentioned this to you before we jumped on live here. I thought we were off to the races this morning, and then we kind of backed off.
Yeah, we were off to the races, and we did back off, at least in corn and soybeans. Wheat finished on a firm note, still off its highs, but a firm note. 3 days in a row higher, though, on corn, Jess. Export sales on the weekly numbers, okay at 35.1 million. Not outstanding, but looks like the end users are still kind of, hand to mouth or as needed. The total for the year, 1.173 billion, and I bring that up because we slipped behind last year's pace this week, which or last year's number at the same time, 1.203. So not a lot, but so in general in line with where we were last year. But we've been running ahead of schedule in corn. Boy, soybeans, a good number today at 43.5 million. But I need to kind of point out, Jesse, that the total is 1.119 billion. So that's a big number, right? But last year at this time was 1723. So we're down 33% from where we were a year ago at this time. So that's part of the struggle in beans. And then there's the perceptive issue in beans where they've get like today, again, you got to rally. Got to rally yesterday, 20 cents yesterday, and we gave up all of it other than a couple cents. Is that there's ample supply compared to 60 days ago, ample meaning enough. And then the expected supply out of Brazil, which will be a record, probably 144 million metric tons, which is a lot of product down the road. So
Yeah, a
that's the
lot of
story
things
in
to
beans. Yeah.
yeah, a lot of things to look at. I think we've been watching just more the relationship between soy oil and crude oil as well, and I think that's had an effect on this soybean market as well, Bryan.
Yeah, crude oil sort of peaked here. Whether it's a pause or it's done. And on the bigger picture, we don't know. My guess would be a pause, but we're around 82, $83 on crude oil, peaked over 85. You look at the soybean oil market, the chart looks almost identical, kind of a peak and then a pullback. Same thing with the palm oil. So the world vegetable oil market is still tight. Prices are firm, but there's not really a new catalyst, it seems like, pushing prices higher on a day-to-day basis. And so the bean market, although it tried to rally again today, just doesn't seem to quite have the follow-through buying. The last commitment of traders report indicated that funds were long about 20,000. We'll see what this week says. Maybe they're going to get closer to even money. Uh, or the flip on corn is we think they've been buying this week, and they've been buying the dips. And again, we didn't finish at the high today in corn, but remember, again, coming or moving into the pause session, kind of a little softer. Come out of that pause session at 8:30, and boy, the bulls are ready to go.
Well, and speaking of corn, we got through that 550 mark, and I think a lot of people were targeting that. And I've been hearing a chatter here and there that some analysts, some folks think we put the harvest low in corn. What do you think about that? What's the chart saying? What are your thoughts with this corn market and where it sits here as we near the end of the month?
Yeah, the chart is telling us that. It really is. The harvest low would come on the September supply and demand report on September 10th. We saw December corn break $5 that day, had a low of 497 and one half, and then make a nice reversal upward. Big bullish key reversal. Um, Key reversals when the market has a bigger range than the previous day and closes firmer. and at the bottom of a downtrend. So nice big reversal. The market then kind of rallied to a point, dropped off, got another negative report here in in October, reached the low there of 506 and three quarters. That was on the 13th, right after the reports, and we've been higher since. So the market has kind of taken the negative news and gobbled it up pretty quickly. I don't think farmers have an appetite to sell into to dips. They don't have an appetite to sell in the rallies right now with the whole fertilizer thing up in the air. So there's not a strong, let's say, wet blanket of farmers selling over the market right now. And end users are becoming a little more concerned. We're hearing some strong basis pops from some, and you hear a lot of things through the grapevine. But one of the things you've heard is, hey, these feedlots, they want to make sure they have corn. They don't want to get into something in July or August where all of a sudden there's no inventory. So we're hearing they're pretty aggressively trying to fill their coffers.
Well, and there's a lot of things to consider on that front, as you mentioned, feedlots and the end users getting a little worried and just looking at marketing. And I'm hearing some of that as well. That there's a lot of guys who are maybe pulling this out of the field and they're looking at their marketing plan pretty hard. Maybe not marketing a whole lot right now. I think about this though as well. You look across the northern plains, we've had some good rain here that's helped to replenish the soils. You start thinking about 22. I know
Mhm.
they're making decisions, and one has to wonder, will we see some farmer selling, some marketing pickup for that 22 crop? Because prices are good right now as we look at the board out to 22. One has to wonder if we'll see some sales, forward sales there.
You probably should. So your listeners and watchers, the thing here is that, in my opinion, Brian Doherty's opinion, the first 25-35% of your crop you sell on price and value, and you sell if the market offers you opportunity. And all of a sudden it is. We're at 550 today. Now the whole uh, kink in this, it's got everybody turned upside down is, well, can I get fertilizer? It's available at what cost? Do I chase it today? Those kind of questions. So I think this is going to keep farmers fairly soft and they're selling both old and new crop till they feel like they got a little more information. Let me just address the old crop. You're out harvesting right now. You're trying to get things done. All of a sudden, you got a price rally when you don't really expect it. Are you really going to shift gears? You're drying corn trying to put in your bin. Are you going to shift gears and haul it to town? Maybe. Or are you going to be like a lot of other farmers who say, I don't really probably need the cash flow this year. Let's finish harvest and worry about it. Or I just got done with harvest and put it in the bin. I'm not ready to take it out unless money talks. And so maybe the money's trying to talk right now. But I think the reluctance for farmers to sell, and that'll probably be the same thing for this new crop. However, sell early, sell often. That's kind of a mantra that I like to use. If you see 550 December corn for next year and you sell 5 or 10%, you haven't overcommitted yourself. You got something started, but you kind of got a bird in hand mentality. And if that's your worst, hopefully it is, you're going to average up. So I think it can only get better from there. Uh, the last thing I think any of us think about now is some sort of black swan event where all of a sudden this whole thing looks a lot different in 60 days and South America's got all these beans coming in and double crop the corn, but it sure looks like right now this fertilizer thing is a real deal.
It very, very much so does. On the wheat markets, shift gears there a little bit. Spring wheat has been leading us. We are well above $10 now and holding there. Chicago KC wheat moving along. We're pushing up towards $8 again on the board in both those complexes. I think about our wheat growers. I know winter wheat struggling a little bit in some areas with weather issues. And I think about next year's spring wheat. I alluded to the good precipitation in northern plains. We know things are tight with global milling wheat. You look at wheat for next year, wonder, how many acres are going to go to wheat with prices there as good as they are.
Well, the go to wheat is in fall acres, that window's closing really quick. So you're talking
Yeah.
about the spring window, and
Yeah.
obviously that is really encouraging the northern plains guys to push a hard pencil. I think it will. I mentioned a few minutes ago, money talks. When you look at those contracts out there, Minneapolis September wheat trading 855. It has picked up $1 here in a month. That starts to talk. Um, Input costs, yeah, for wheat, but probably do you You run corn instead of wheat? Probably not. Right now, you talked about milling wheat, high prices in Europe, French wheat, record high prices or high prices for the year. Again, concern that China may be using wheat as a feed. Um, Russia not selling wheat or taxing it to kind of keep it in house. So a lot of variables there. Like the idea that wheat is leading the charge here. That's a world crop produced in every major country, harvested 12 months out of the year. Nice to see that leading the charge. Probably more reflective or supportive for corn than beans, though. And I think that is some of what you saw today again was the traders on the pullback buying the wheat, selling soybeans. So the soybean rally bought the wheat. That's been working pretty well. So I kind of rambled on in different areas, but sure looks to me like the spring wheat is going to buy those acres in the Dakotas that traditionally have been good wheat, spring wheat country, anyways.
Yeah, there's a lot of things I think to unfold here moving forward the next couple of months. Brian, let's talk livestock. Looking at hogs today, pretty strong export report. That hog market finally found some buying here, triple digit strength. One has to wonder, we going to follow through with this into tomorrow and into the end of the month, or is this a 1 day novelty in this hog market
Yeah,
right
it's a
now?
pretty stout looking, either up day or reversal, depending on how you look at the charts. But you almost think it came at the cost of cattle. That the traders unwound the cattle hog spread today, or decided to take a shot at buying the hogs. Something like the February contract there, you got a double bottom after a pretty hard sell off from just under 88 to 74. Appears to be good value. Hard to kind of get a handle on this. Was reading some article today about the amount of money being lost by Chinese hog producers, the four largest,
Mhm.
and it's staggering. So does that mean they contract the herd and we capture export business, or does it just mean they just eat less pork? I don't really know, but it's a dynamic that to me slants our markets toward favorable for stronger export activity and stronger markets there. We've got, Thanksgiving not around the corner. Then you start looking at Christmas hams and all that kind of stuff. Got to think this is a really good potential for retailers or wholesalers, if you will, to buy hedge against higher prices here. Um, Cattle seem to be well supported. Let's call it the mid 120s. Probably some 126 trade this week, but still kind of stuck in the blocks. Cutouts high, but not resulting back into high prices for the producer. The packer seems to be caught in the middle. Labor issues, COVID issues, whatever issues, can't seem to get enough product through the line. So that's um, that's creating a stagnant futures market, even though we are seeing on the charts some pretty good recovery from the recent lows. As an example, April and mid September was 133, 138. So we picked up $5 in a little over a month. Um, Not back to the highs, but did pick some up. But it looks like it's having a tough time gaining upward steam, upward momentum. Cattle on feed report Friday. Maybe that'll change things.
Yeah, and I think with this cattle market, I think one positive I saw just the good cash trade this week. The feedlots who are seeing some good prices, $4 higher in the north, $2 higher in the south. On the cattle side, I think that's at least a positive, even if we unwound a little bit of that cattle hog spread here today, Brian.
Yeah, and it sure looks like that. I was in error there. Cattle on feed reports last Friday. I thought when I said that I was a little bit screwy, but um, you've got You've got a cattle complex and a cattle market that isn't overburdensome with supply, but you got to have the demand pull this market higher. When you get in the 130s like this, we've got to get demand to pull the market higher. Perceptively, the market went higher to 140 on April, or a little bit higher than 140. And that was a couple of months ago. And that was when you're looking at a number of variable factors, demand in particular. Right now, the world's kind of being spun in circles, and you got high energy prices. You got a stock market that looks really strong, but appears to be vulnerable to fall apart. You got worries that China's falling apart at the seams. There's just a lot of uncertainty. It just doesn't seem like the trade is really wanting to buy into rallies and cattle on that uncertainty, at least just not yet.
Brian, what about the dairy market? Give us an update on what you're seeing there this week.
Volatility. That's what we're seeing. um, just screaming high prices early in the week, short covering, end user buying, speculative buying, all kinds of activity there, and then all of a sudden, kind of shot straight up, and then almost straight down. So, as an example, if we looked at the December milk contract, just blew up from $17, peaked out really fast in about a month's time at 19.12, and now she's pulled back. She's down to about 18 and a half. So giving back some of those gains, um, and or I'm sorry, 1964 high there. So pulled back. Good demand for product, higher corn prices. Look for lower production because we're going to reduce that herd some. Maybe a little bit of a hindrance in the cattle market. Maybe we're seeing some of that with some extra cows come through the pipe. But ultimately, $5 plus corn, milk probably needs to trade at 18 to $20 level, and we're just kind of scratching the surface on that here with most futures contracts at 18. So maybe some hedge opportunity, but I think kind of just be patient here, see if it doesn't bounce back. But man, we hit that $19 mark, or we get an average price for next year, $19. You've got to start defending that price.
Bryan, any other final thoughts you have for us here on this Thursday?
We've talked a lot each week about volatility and how this can all change so quickly. I'm going to continue to echo that. Right now, the corn market has a firm tone to it. It's got some good muscle. Looks like it could go higher. I've got a December contract about a 580 area targeted on a based on an inverted head and shoulders formation. Um, as a producers, you know, fear often takes over. And what does that mean? Well, if you sell on a rally and then it goes higher, then it's yeah, you fear you're going to make a mistake. Uh, the old adage, sell rallies. Nobody ever went broke taking a gain. Think about how much inventory you want to carry, but think about the last 18, 24 months, how rapidly views on things change. So it looks friendly, but just kind of keep in mind that we've seen, more sort of black swan events and crazy stuff happen in the last 18 months. So play it conservatively. If you want to own corn, I'd say do something in the option market with a fixed risk. Buy call, bull call spreads, get some time on your belt, stand in front of the market, but be careful how much cash corn you hold into this market. Everybody's looking for better basis and higher prices, and when everybody leans one way, it can happen.
Exactly. Well, if producers need a little bit of advice, I know they can reach out to you and the team at Total Farm Marketing very easily with a phone call. That's one of the best ways to start, isn't it?
I'd encourage that. Our number is 800-334-9779. For those who, might listen to this at a different time and can't call me or don't want to, you're busy, you can connect with us at night. There, I'd say just shoot me an email. It's simple. It's just Bryan at totalfarmmarketing.com. Two M's in there, farm marketing. Um, and throw me your question and I'll get back to you, or we'll schedule a time to try and connect. But these are just really, really, really important times, and want to make sure we're really kind of what I call balanced, moving into this, environment with kind of eyes wide open that we could see prices skyrocket, we could see it all end, and let's talk about that.
Well, Bryan, we appreciate the time as always. Thanks for joining us on this Thursday, sir, and have a great weekend. We'll talk to you next week.
Jesse, thank you. Appreciate the opportunity. And again, my wishes everybody have a safe harvest here. Slow things down. If you're getting tired, it'll get done.
Definitely. I can't echo that sentiment any better myself. Bryan Doherty with Total Farm Marketing joining us today here on Market Talk. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.